What if I told you that the single most pivotal, earth-shattering financial event of our lifetimes is not happening on Wall Street, not in the crypto markets, but is quietly unfolding right now in the heart of the Middle East, centered on a currency that many have written off as a lost cause, the Iraqi dinar. We are standing at the precipice of a monetary transformation so profound that it could redefine global wealth, and the catalyst, the spark that has ignited a firestorm of speculation and hope among investors worldwide, is the staggering and seemingly impossible claim that a single 25,000 dinar note is now being valued at an astonishing $85,750. Let that number sink in for a moment. $85,750. This isn't a typo, nor is it a speculative fantasy from a decade ago. This is the very specific, electrifying update that is ricocheting through dedicated investor forums, encrypted chat groups, and financial intelligence circles as we speak, and if this valuation holds even a fraction of truth, it signifies one thing and one thing only: the long-awaited revaluation, or RV, of the Iraqi dinar has not only begun but is already producing tangible, life-altering results for those positioned to see them. The journey of the dinar has been a marathon of patience, a test of faith against a backdrop of geopolitical turmoil, economic sanctions, and seemingly endless delays, a roller coaster of hope and disappointment that has tested the resolve of the most steadfast holders. But today, the air is different, the information has a new, undeniable weight to it, a credibility that previous rumors lacked, because this is not unfolding in a vacuum. This potential revaluation is tethered to a series of concrete, verifiable, and monumental shifts within Iraq itself, a nation that is aggressively and publicly shedding the economic constraints of its past and marching with determined focus towards a future as a stable, sovereign, and economically powerful player on the world stage. The Central Bank of Iraq is no longer a passive entity, it is an active architect of this new reality, implementing bold monetary reforms, aggressively battling inflation, and taking decisive steps to untangle the dinar from the dominant US dollar in its internal economy, a move that is absolutely critical for any nation seeking true financial independence and the strength to support a vastly stronger currency value. They are not just talking about change, they are legislating it, enacting it, and building the digital and regulatory infrastructure to support it, with a new, advanced digital payment system designed to reduce cash reliance and increase transparency, and serious, high-stakes negotiations with international bodies like the International Monetary Fund and the World Bank to clear path for this very event. The ground is being prepared with an urgency we have never witnessed before. Furthermore, look beyond the banking halls and into the nation's physical economy. Iraq is sitting atop one of the world's largest proven oil reserves, a source of almost unimaginable wealth that has, for decades, been hampered by conflict and instability, but now, with oil production stabilizing and new global energy agreements being signed, the revenue flowing into the country is creating a massive financial bedrock, a multi-trillion-dollar foundation upon which a revalued currency cannot only stand but thrive. This isn't just about oil, though. It's about a strategic pivot towards massive agricultural revival and industrial diversification, projects that promise to create a robust, multifaceted economy no longer solely dependent on a single resource. All of these elements, the banking reforms, the digital transformation, the oil wealth, and the economic diversification, are not isolated incidents, they are interconnected threads being woven together into a single, powerful tapestry of national recovery. And at the very center of that tapestry is the dinar, its value poised to reflect the true, untapped potential of Iraq. The reported valuation of $85,750 for 25,000 dinar is the potential first flash of that new reality breaking through. Now, before you dismiss this as another internet rumor, I need you to do something for me, and for your own financial future. Hit that subscribe button and ring the notification bell right now, because what I am about to explain in the next segment is the classified level detail that connects these Iraqi reforms directly to your bank account, and you cannot afford to miss a single second of what comes next. So, how do we bridge the colossal gap between the current official exchange rate and this staggering new figure of $85,750 for a 25,000 dinar note? The answer lies not in magic, but in the cold, hard mechanics of international finance and a deliberate, state-sanctioned process known as a revaluation, a fundamental recalibration of a currency's value against its peers, and for Iraq, this is not merely an economic adjustment, it is the ultimate tool for national sovereignty and debt eradication. Imagine Iraq as a corporation emerging from a long and painful chapter of bankruptcy. Its assets, primarily its vast oil reserves, are worth trillions, but its stock, the dinar, is priced at a fraction of a penny, a gross misrepresentation of its true net worth. A revaluation is the moment the market corrects this discrepancy, repricing the stock, the dinar, to accurately reflect the immense value of the corporation's assets, and the mechanism for this is the deletion of the three zeros, a phrase you've likely heard but may not fully comprehend in its profound implications. This isn't just about printing new banknotes with smaller numbers, it is a surgical monetary procedure where the Central Bank of Iraq would demonetize the existing lower value notes and introduce a new dinar that is, for argument's sake, 1,000 times stronger, meaning that one new dinar could equal 1,000 current dinars, instantly aligning the nominal value with a more realistic and powerful international exchange rate. This process would immediately and dramatically reduce the money supply, crushing domestic inflation in one fell swoop, as it would take a massive amount of physical currency out of circulation, and it would fundamentally transform Iraq's balance sheet, slashing its external debt burden to a manageable fraction overnight because debts denominated in dollars would now be payable with far fewer, much stronger dinars. The economic liberation this would grant Iraq is immeasurable, allowing for unprecedented investment in infrastructure, healthcare, and education, funded not by new debt but by the unleashed value of their own national currency. Now, let's apply this directly to the $85,750 claim. If we work backwards from that figure, a 25,000 dinar note being worth $85,750 implies an exchange rate of approximately $3.43 per single dinar. This is precisely the range that many long-term analysts have predicted, as it positions the dinar not as an absurdly dominant global currency, but as a strong, stable, and respectable Middle Eastern currency, on par with, say, the Kuwaiti dinar or the Jordanian dinar, its regional peers, which trade around $3.20 and $1.40 respectively. This proposed rate is not a random, pie-in-the-sky number, it is a strategically calculated value that would restore Iraq's purchasing power, grant its citizens immense economic mobility, and attract serious foreign direct investment without causing the kind of global economic shock that a hyperinflated value would create. The path to this rate is being paved by the very reforms we discussed. The dollar separation is crucial because it untethers the dinar from an external anchor, giving the central bank full control to set its new, sovereign value. The digital payment platforms create a traceable, modern financial system that can support high-value transactions, and the international banking agreements provide the necessary liquidity and credibility for the new rate to be accepted on forex markets worldwide. This is a meticulously planned orchestration, not a random event. The recent news of certain international airports and border points potentially facilitating exchanges at new, higher rates is the first tangible, operational evidence that this system is being activated in a controlled, phased manner. This is why the $85,750 report is so electrifying. It is a potential data point from the front lines of this activation. But understanding the mechanism is only half the battle. The critical, urgent question is, what do you do right now? The window for preparation is closing fast. Stay with me, because in the final segment, I will give you the definitive, step-by-step action plan you must follow in the coming days.
The intelligence is clear, the mechanism is understood, and the potential for life-changing wealth is real. But this moment of unprecedented opportunity is also a minefield of critical decisions that will, without exaggeration, determine your financial destiny for generations to come. The first and most non-negotiable rule is this: you must immediately verify the authenticity and security of your dinar holdings. In the wake of this stunning update, the market will be flooded with counterfeits and unscrupulous sellers looking to capitalize on the frenzy. If you hold physical currency, you must ensure it is from a reputable, documented source and is the correct current series. This is not the time for uncertainty. If you do not hold any dinar yet, extreme caution is advised, as entering the market at this volatile juncture carries significant risk, and any purchase must be made through a bank or a dealer with an impeccable, long-standing reputation, with all original certificates of authenticity intact. The second phase, once the RV is officially confirmed and live on international forex markets, is the exchange process itself. The key here is patience and strategy. The initial wave of excitement will likely cause chaos at the first announced exchange locations. Rushing to the first bank you see could mean long lines, potential confusion, and unnecessary stress. The official, structured process will be communicated clearly by the Central Bank of Iraq and their international partners. Your best course of action is to have a pre-identified list of primary and secondary institutions. Major international banks with a known history of dealing in exotic currencies, certain credit unions, and officially designated exchange centers. Do not feel pressured to exchange all of your holdings on day one. The new rate will be permanent and you will have time. This leads to the third and most crucial part of your plan: financial stewardship. The sudden arrival of substantial wealth is a psychological and logistical earthquake, and without a plan, it can be as destructive as it is beneficial. Before you do anything else, your very first move after a successful exchange must be to set aside a significant portion, at least 30 to 40%, for tax obligations. Consult with a qualified, reputable tax attorney before you exchange, not after, to understand your liabilities. Then, and only then, can you consider wealth distribution. The wisest path involves a triad of advisors: a fee-based financial planner to help you structure a diversified portfolio for long-term generational growth, a seasoned estate attorney to establish trusts and wills that protect your assets and your heirs, and a trusted accountant to manage your newfound cash flow. This is not about getting rich. This is about building and securing a legacy. Think about what this freedom truly means for you. Is it financial security for your family? The ability to fund groundbreaking charitable work? The pursuit of a passion you've always deferred? Let that purpose guide your decisions, not the euphoria of the moment. This update, this potential $85,750 valuation, is the signal so many have waited for, a beacon confirming that their patience and foresight were not in vain. It represents more than just money. It represents the validation of a belief in a nation's recovery and the power of strategic, forward-thinking investment. The information has been delivered to you. The path has been laid out. The final, most important step is yours to take. This is your moment. Do not let it pass you by. And if you found this breakdown critical, if this guidance has provided you with the clarity and confidence you needed, then I need you to do one more thing for me. Go down into the comments section right now and type legacy, because that is what we are all building here today. And of course, if you haven't already, smash that subscribe button and hit the notification bell, because our coverage of this historic event is far from over. We will be here every step of the way, providing you with the verified, real-time updates and expert analysis you need to navigate this new financial landscape. Thank you for watching, and I will see you in the next truly historic update.